Good morning, good evening, good afternoon, depending on where you are in this world. This is Hedge and Lee, and I want to share with you some primary and alternate count scenarios on a longer term scale for Ethereum. Let's go to the primary count, which is a bullish count. We had 5 subwaves, which gave white wave 1. Visually, you can even see how 3 wave-ish this looks, a corrective sequence. So this was an A, B, expanded, C, 1, 2, 3, 4, 5 of C, and this ABC gave wave 2. And if 1 is finished, 2 is complete, we're on 3. Okay, this wave 3, from an earlier wave perspective, should be 1.618. And that'll give us somewhere at around 545, 550-ish. Very close to where it is right now. But on a bullish scale, it'll likely exceed maybe to the 600s, 700s. Remember, wave 3 moves most viciously within an impulse. But not only that, once wave 4 is complete, we know that cryptos behave very similar to commodities. And in commodities, they have a habit of extending their wave 5. So this bullish impulse will be quite significant, especially if we get 2 confirmatory actions. First, if the price can take out the prior August highs, just like Bitcoin did, and remove the current bear divergence, that'll be very confirmatory of this wave 3 hitting pretty soon. The second confirmatory would be if we see this declining volume start crescendoing, rising, because that is what a bull market needs. A bull market needs more and more and more buyers, new buyers, fresh meat to come in. So far, since the March lows, it hasn't been doing that. And you see the same thing in Bitcoin too. But given this analytical scenario and the Fib relationships, the 2 big assumptions will be made: that the bear divergence will be taken out and off the table by price rising above the August highs. Boom. Second, volume will start crescendoing higher and higher, bringing in new and more buyers to enable this trajectory. The alternate count. There isn't always an alternate. A good analyst and a trader must always ask as many what-if scenario questions to identify as many possibilities, and from that pool, bin of possibilities, he or she selects the probables. Top and alternate, second alternate, third and fourth alternates. Why? This is a world of probabilities and possibilities, not of certainty. So to that end, this alternate count says we had a 5-wave structure down, and that could be the subwaves of a higher degree of trend, A. This ABC, okay, this was a 5, 3, and we're getting 1, 2, 3, 4, and 5. We may be on the wave of 5 of C of B. That would give the B wave. Thereby, B wave was saying that this is a zigzag of 5, 3, 5. And what's important is that supporting this scenario is this declining volume. Bull markets are not made from declining volumes. It cannot be. The reason is because a sustainable bull market must have more and more new buyers coming in. And this is saying that's not the case right now. At hedging.com, we are using additional trendline-based confirmatory signals to enable us to pick based on probable chances on which direction this will take. Currently, we are at 70% primary, 30% alternate. Subject to change at any moment, given the confirmatory signals that we are using. We are a growing, fast-growing community of traders, analysts, and investors. Join us. Gold memberships. Get access to everything. And yesterday we had a great session of gold member-only Q&A, where it's a live Q&A. Only gold members can come once a month for about an hour to an hour and a half and fire away at questions or custom analysis requests. No limit, whether it be crypto, stocks, forex, commodities, or any other chart. Someone had me analyze the chart of a COVID bar chart. Everything runs on sentiment, and everything runs according to the law of Fibonacci mathematics. So anything and everything can be analyzed using fibs, or a technique that utilizes Fibonacci, such as Elliott waves. I hope you find this to be helpful. Have a good day.